Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 12th, 2018. The markets have just opened. It's a little after 9:30 Eastern Time. Just a quick reminder too, in these videos, I make mention sometimes on the posts on the front page, but you can, and I usually do this, just go down to the settings, the little settings icon cog on the bottom right, and well, let me check this price alert real. Okay, pretty much a false alarm. That was an old alert that I should have canceled. It had already gone off before. This is, well, I might as well just cover this. I'm covering trade ideas in this video. CVS, here it is on the 60-minute chart. And you can see we've got a sort of a little triangle pattern going here. Descending triangle pattern. Look for a breakout to the upside. Basically, what happened, it broke out from this downtrend line, this wedge type pattern. We had a divergent low, put in an additional divergent low, tested those lows again. You can see extended the divergences right here at this point. So from this time frame, it looks good. On the 60-minute time frame, it's been consolidating above this level, 63.33. I could actually lower that down a little now, and that cuts those lows a little bit better. Call it $63. And if my market scenario plays out, which I'll get to in a second, I'm still leaning towards the upside case. And, not sold on it, open to anything, but that's where I'm positioned and hoping we go. And if we don't, then I'll adjust quickly. But there's the targets on CVS. And on a daily chart, if you're, longer term trader, this one has the potential to get all the way back up here. But at this point, I haven't updated this daily chart in a while. I'll tell you, I'd have to put a line right here and tell you this would be the first target at this point in time around 66.60. All right, let's move on to what I had intended to cover. Okay, well, we'll start out with the broad markets as I usually do. I mean, this is where keep in mind, when with regarding the trade ideas on the site, we have a mixture of long and short trades as I usually do. Um, some have a correlation to the stock market, some don't. But those that are highly correlated to the stock market, for example, I had a question on Netflix yesterday. Randy, would Netflix be a, good time to reshort it. Well, on face value, yes, because it had bounced back to resistance. But if my scenario plays out here, which I'm leaning towards, and we take out these levels, this is the NQ E-mini futures, and I've put the line is clear right here. It's that same level I'm looking at, around 66.52 or so. You can see just numerous reactions here. So my point being is birds of a feather flock together. And Netflix is a component of the NASDAQ 100. So if the NASDAQ 100 breaks out, is it possible that Netflix fails at that resistance and heads down to the next swing target? Absolutely, it's possible, but not. It gives that trade, it gives a short trade a headwind, because if the market's rising, you have forced buying, you have money coming back into the QQQs, the NQE minis. We have a lot of reactions here, so it's a very significant technical level. And here's a trend line below. So, this thing, like I said, it can go either way. Um, I'll respect, whichever way it breaks. And if it does break down, the thing about it, even if that trend line breaks, there's quite a bit of support down below. You can see a lot of reactions on this line here. We do have a little bit of support down below here. I could draw a line as well. So we could continue to be range bound, but I think we'll break out. I think we'll break out by today or tomorrow to the upside if we're going to break out no later than early next week. We've had a lot of volatility. The market's been consolidating. And remember, this consolidating price action, although, yes, if you want to play the bearish card, and I can certainly, I'd be remiss not to recognize it. There's some negative divergences there if we do break out to new highs. But as I believe I answered in the trading room to someone's question yesterday, those divergences come on the heel of much larger, more powerful divergences here on the 60-minute chart that, in my opinion, haven't fully played out, for the expected trend reversal. So there are times where, um, and I don't believe it's confirmation bias. I recognize this pattern and I will respect it whichever way it breaks if these support levels start to go. There are times that divergences, I always say, are not the be all end all. There are some divergences that get burned through. These divergences really aren't as clean either as these divergences were. So that's why I'm, leaning towards this. And I think if and when we pop above there, it's pretty thin all the way up to about here. So like I said, there's, some decent percentage moves if we do take out that level. And for those of you that don't trade futures, I'm just looking at the futures because they trade around the clock. It's clean. But we can look at the QQQ here. Let's see, I have the Q 60-minute, or we'll look at a 15-minute chart. Actually, that's where a lot of the action is recently. Or not so much the action, just the levels that I have. So here, I put an orange line. It's as clear as day. Once yesterday we hit, this is a fib retracement level too, and it comes off the highs that go just to the left of this chart. And I keep saying, give it a little margin of error. I've said, 160, even though that line was at 166, 160, 166, call that level one, give it a little bit of margin error. We hit that fib line. So right now, if you want to be safe, you want to see that recent reaction high from yesterday taken out. That proved to be a little false breakout. If you look closely, you see what I'm talking about here. It was just a 15-minute candle spike. Sorry, we're on a 15-minute chart. As volatility subsides and we get in this trading range like we've been in now, what happens is I'll go down to the smaller and smaller time frames to try to get a clue as to where the markets are going. If I'm day trading, I'll even be down in the world of the 5-minute and sometimes the 1-minute charts. So that's why usually you guys hear me talk about 60-minute charts, daily, weekly charts. But when we are in this tight trading range is price compression. It doesn't make sense. There's nothing going on the daily chart worth mentioning. This is what we need to watch. And so if we get a breakout to the upside, great. We'll watch it, see what happens. Look to see if it's impulsive in nature. We're going to get a 15 and then a 60-minute candle close, especially a daily close above that level. Or on the downside, we'll just have to see how these, support levels act if it's taken out. So that's where we're at, guys. And if you're getting bored and frustrated with the market, don't. The market isn't going to give you these 2-3% plus price swings day after day. In fact, they're unusual. And as I forecast or anticipated recently, I said volatility will drop down. We've already been at extended volatility levels for several weeks now, and a couple months actually, I should say. And that usually the long end of that, when I went back, I showed you guys recently in a video, I think it was a 10-year chart. I think the longest period of extended volatility on record was nearly 3 months. So, and after that, it usually drops off and things normalize for a while. So let's see what happens here. Not much more to say on the broad market. Okay, let's get back to trading ops. Where to make money? Well, of course, the market, you can make money in trading that. If you're trading these small ranges, you can take it up. Depends how you're doing day trading or swing trading. That's up to you. Swing traders need to wait for really a definitive break out of that level. Or I'll say this, going back to that chart, let me just not jump back to it. Let me leave it here on this chart. But you could if you expect a long side breakout, you can take a long position on the Qs with a stop somewhat below either that trend line or some of those nearby support levels that I told you about in anticipation of a breakout. This market's going to break one way or the other. Likewise, if you're bearish, you've seen the QQQs hitting that wall of resistance I just showed you. You could certainly short there with a stop somewhat above, give it a little bit, percent or so. Depends on how much you're targeting on the downside. So you don't have to wait for a breakout. We will break out of that range sooner than later. It'll almost certainly be by early next week. I'd imagine by the latest. That's my best guess. Can't give you any guarantees on anything in the market, but here's what I'm looking at today. We finally got the breakout, some impulsive moves in Bitcoin. This is GXBT, the Bitcoin futures. 60-minute chart. We had that bullish falling wedge. We had a breakout. They faded that, but we didn't. It wasn't a complete. It wasn't a bear trap by any means. And like I said, we still had divergence. This is strong, powerful divergence. And whether you believe in Bitcoin or not, I could care less. Whether Bitcoin's around in 3 years or not, or all these cyber currencies, whether it proves to be a fad or it's here to stay, it's a tradable instrument. You give me anything, you give me something that I can chart, something with a ticker where with a few clicks of the mouse I can buy or sell it, and I will trade it. And that's what I'm looking at. So nice move today. I want to see if it holds this level right here. That's 76.77. That was a target level here. We blasted right by this support. So if that 76.76 level, that's what it is, 76.76. If that level gives way, The next support here is 72.25. I would expect that to hold, and there's my next target. Ideally, I believe this one will hold. This has been another coiled spring here. Somebody made mention that in the trading room today, oh, what a big move! It's 12% or so move right now in Bitcoin. Yes, relative to the past few months, but when you look at a longer term chart of Bitcoin, here I'll show you that. Okay, here's this is a chart of Bitcoin, daily chart, daily candles, and you can see today's move. Even though it's faded a little bit of the pop, come back to that support I just showed you on the 60-minute chart, still up about 12%. And as big as that might seem, it pales in comparison to the moves leading up to the highs. You can see some of these candles were much larger, much more powerful. So we're just now getting back to, and as I mentioned in that, my reply, you know, bullish falling wedges act like coiled springs. When you get this price compression, smaller and smaller price ranges within a wedge, that is energy building, just like a coiled spring. And that's why I love to trade falling wedges, rising wedges. When they break out, all that energy, then it's potential energy. It's released. But again, point I wanted to make is you just look at that candle relative to the candles up until this recent consolidation period, and this is just a run-of-the-mill move so far for Bitcoin. Okay, and as I mentioned, for those of you that do not trade futures, you have an option here, GBTC, pretty much a pure play on Bitcoin. Let me get rid of that line there. It's bothering me. Falling wedge. Just keep an eye on it if we continue to move. Surprisingly, this one's now only up. Oh, you know what? This chart's delayed. This GBTC is up. I'm looking at another monitor where it's streaming 8.89%. It's up about 9% now, a little off the high. So it's hit a high of 1286. So we did take out this trend line. This one is delayed here on this particular instrument. This is an over-the-counter security. But your other options are, as I mentioned, they're proxies, if you will, overstock.com. That's been doing well lately. And you can see this is right around that first target I have here, about 30, 39, 30. So we came back, kissed this support level here, and it's moving up. It started to move up, what I believe. I took little positions in this, started nibbling on it and added to it. But because in anticipation, there was such a clean, beautiful falling wedge on Bitcoin that I think others saw what I saw and said, time for overstock. And these other companies like what's the other one I have? Riot, RIOT. There's others out there, but this one as well up another. It's taken out now that downtrend line, bullish falling wedge up another 12%, and plenty of room. This sucker moves. It cuts both ways, guys. Keep that in mind. What goes up a lot can fall a lot. It's about another 28% upside to that target there, about a 960, and whether it hits that target and how soon. Depends largely on whether this breakout in Bitcoin sticks. That's about all I can tell you. Okay, crude oil. Mentioned this one recently. These are crude futures. Had this divergent low. I've told you I've been eyeing it for a potential short trade, a swing short, and but the timing wasn't there yet because we had this divergent low and it needed to play out, and I think it has on the 60-minute chart. You can see a very well-defined uptrend line, price channel here with a divergent high. See the negative divergence, and boom, it has broken down. So we'll look at this on another. Okay, here it is on a white chart. Might be a little bit different draw on the trend line here, and using a MACD instead of the PPO like I had on the other one. But the most important features here are this. We had negative divergence at this high, recent high. Prices are now moving lower, so I look for these 60-minute divergences, just like we had a divergent low here on the 60-minute chart. If I drew that out, which I had on the other chart, you can see the bullish divergence, and now we have bearish divergence. So I think we come back in. Here's some potential targets marked in blue: 65.83, 65.25 on CL. And USO is one of the more popularly traded crude tracking ETNs. Clean, bearish, rising wedge, divergent high. So where you can, two ways. You can short here at the top of the wedge on this divergence and that 60-minute trend line break, or wait for a little more evidence. You can see the PPO is still pointing up here If that rolls back over, that'll help firm up the case that we're moving down to the bottom of the wedge. There's multiple strategies on how to do this. You can either take a full position here with a stop above. It's a little aggressive, in anticipation of breakdown of a wedge. You could take a partial position, adding if and when the wedge breaks. And again, that's one of many options. You can see some levels here. I don't have a price targets outlined here, but then DWT. I know a lot of people like these leveraged ETFs. And again, if you're getting in and you're not holding them for a long period of time, or you can get in even if it's a multi-week or possibly a multi-month run, if it's fairly unidirectional. I've talked about that a lot in the past. Check out the FAQ section on the site under ETF related questions. I talk about the how the leverage can actually work in your advantage instead of against you if you get a pretty swift move. So if DWT, which is the 3-time bearish inverse crude ETN, does reverse, you can see the levels I have here. We can draw out a scenario, something like this. And that's, a lot of meat on the bone on this one. Again, there's still some work to be done. If my confidence is high enough, I will add it as an official trade. But, a lot of these unofficial trades pan out very well. And I can only manage so many on the front page. I still have to update Kane. I haven't posted an update. That had the stop clipped by a penny yesterday. I need to update that one, remove it. So there's a function of both trying to limit the number of trades because I have to do additional posts and updates on the active trades, the list price targets, suggested stops, beta adjusted position sizes, all that good stuff. So these unofficial trades I can go through a lot quicker. Take what you like, pass on what you don't like. That's all I can tell you. And here's lumber futures. This is a 60-minute chart. You can see these uptrends, random length lumber futures. Another uptrend line breakdown. Looks like we're going lower. I'm not ready just yet to yell timber on the lumber ETFs. Wood is the one we're going to look at here in a second, but I'm getting close. Okay, here's wood. By yelling timber on it, I'm obviously making a little pun there that wood and timber and lumber prices are going to fall. This is the one of two ETFs that track. They don't track lumber futures. I mentioned that in the trading room, and I've mentioned that in past videos. Unlike most commodity tracking ETNs that track the underlying commodity, CORN tracks corn futures. WEAT tracks wheat futures, etc. But this one holds companies that are in the timber and forest industry. However, I put up a chart yesterday here in the trading room, and it shows you. Here, we'll click and expand it. This is going back all the way back to 2009. So this is the entire bull market here, and you can see that the correlation is a near perfect correlation. Don't pay attention to the differences in price. Just like gold and gold GDX, you'll see a difference, in the performance numbers. But when you look at the trends, when one's going up, the others should be going up along with it, and you can see that these track in near perfect synchronicity. So there's a very strong positive correlation when timber futures fall or timber prices fall. Obviously, wood ETF, even though it doesn't hold futures, those companies, that's what they're selling. That's their product. They're cutting down trees and turning into lumber to sell in the market. So there is a strong positive correlation. So this is a way for those of you that don't trade futures, and lumber futures are kind of thinly traded. When you looked at those charts a second ago, there you can see it here. This is a 60-minute chart of LB lumber futures, and you can see, these candles. It's not something that's popularly traded, so you might be just as well sticking with wood on this one. Okay, guys, I'm going to wrap it up here. That is far from an inclusive list. We have official trade ideas on the site. You can check those on the top menu under the trade ideas. There's also, you can scroll down the category, the unofficial trade ideas. Those don't have a symbol tag cloud up there. Just you have to scroll down and click on unofficial long or unofficial short trade ideas, and you can scroll down through there. And again, 90+% of the trade ideas that I put out are in the trading room. Some of those unofficial trade ideas do go on to become official trade ideas, but so there's a lot more there. And if you're not sure how to do that, two ways. When you get into the trading room, just click on my avatar, gravatar, whatever they call this little image thing, and then click on, or you can click on the groups. I'll categorize things. Sometimes I'll have to pick one or the other. I might have a commodity ETN or a future, and I might put it under swing trading, or I could put it under commodities. So you might want to check both. And if you join these groups, you can get email alerts immediately, daily, or in a weekly summary. So if I post something in swing trading and you're signed up for an immediate alert, boom, you get an email right away on that trade idea. So that's another benefit for gold members with access into the trading room. So either way you want to do it, a lot of extra trade ideas there. All right, I'm going to wrap it up here. So far, it looks like we are starting to take out those levels as I just showed you on the QQQ. You can see that we're went above yesterday's highs. It looks good. So, I remain near-term bullish, and that's why the short setups have been on the light side recently. But if that changes, I have a watch list a mile long, and there's a lot of them out there, even some of the active trades that would look good if we take another leg down. But right now, like I said, I'm still leaning towards some more upside here, and to try to quantify it for you once again, probably about another 2.25% up to that 165.64 level. I set the first target a little bit below that to avoid missing a fill. QQQ is still an active trade, and then there could be some more beyond that. But let's see how today finishes, and we'll go from there. All right, guys, have a great trading day.